Vibhav Kapoor, good morning, and sorry that this technical issue is not getting sorted out.
Good morning.
We can't wait to hear you on the markets itself. Is the resilience of the market today surprising you, or did you expect it?
Well, I have more than half expected it, I think. It's not surprising me because obviously while there are a lot of global issues right now, some of them are actually fairly positive for India, and obviously the biggest one of those is the fall in crude oil prices and also other commodity prices. And this obviously has a very, very beneficial impact as far as the Indian economy is concerned, both in terms of current account, fiscal deficit, inflation. And we also had very good inflation figures day before yesterday and some good opinion polls yesterday. So I think I'm not really surprised.
Okay. But Vibhav, would you extend this only for a resilience today, or do you think the bottom of this market is fairly protected and you are a buyer in all dips?
Well, it's still difficult to say whether we can have a further correction in the index. It's quite possible because the global situation is pretty precarious and the FIs are selling, not because they don't like India, but I guess because there's an overall risk aversion, and particularly towards emerging markets. So it's very difficult to say whether you won't have a deeper correction. But what I would definitely say is a deeper correction, if at all it were to happen, would definitely be a good opportunity to add to your long positions.
Vibhav, hi, morning. In fact, that was my next question. A lot of people are now, looking at picking up stocks at good valuations. What are the stocks that you would be looking at in terms of either frontliners or even the mid-cap space?
One sector I think are beginning to like now is the banking sector, and particularly the PSU banks. Although we know that the PSU banks have a lot of problems in terms of bad quality of assets as well as capital needs over the next 2 years. But the fact that inflation is really beginning to come down seriously, and with oil prices coming down further, that could be still better. I think we are at an inflection point as far as the banking sector is concerned, and therefore I think you will get some reasonable appreciation as far as the PSU banks are concerned.
Okay. Vibhav, would this extend more so to the NBFCs?
NBFCs also it could extend to, but they have, there are certain still other issues to be sorted out. For example, RBI norms for NBFCs have still to come out, and therefore one would need to really look at what those norms are. So I would probably keep that on hold for the time being and put money into the banking sector right now and then wait and see what happens.
Okay. This month has been good for some of the technology stocks as well, the likes of Infosys, etc. Would you be buying or increasing exposure in that sector?
Yeah, technology has been a favorite sector for us, and we continue to like it. Obviously, if there's a big slowdown in the global economy everywhere or a recession, then it could have some negative connotations for the technology sector, but I don't think we are in that situation. So business conditions, particularly in the U.S., continue to look pretty good. You have this rupee depreciation issue, and I think that's something which I wanted to bring out, not only for technology, but I think as for the economy as a whole. I think a lot is going to depend on how the RBI and the government manage the currency now, because there are two sides to it. One is that if the rupee does not depreciate at all, you're going to have difficulty in export growth, which you're already seeing, because the rupee is actually appreciating against all the other currencies except for the dollar in a very significant way, against the euro and so many other currencies. But at the same time, you can't afford the rupee to really go down or depreciate in a very big way, because then that would bring back inflationary pressures and so on. So I think a managed sort of depreciation of the rupee would really be something which can be greatly helpful for the economy, and we really need to see how the RBI handles this.
Yes, the governor's speech on September 30th after credit policy was littered with his worries on rupee appreciation, and yesterday's trade deficit numbers would have only increased his fears. It was a fairly ugly rise in non-oil imports in largely consumption-oriented, electronic goods and stuff like that. It will not be lost on the governor for sure. That's a huge problem. You don't want to get into a situation of current account deficit once again at 3% and 3.5% in a jittery global scenario. But Vibhav, just to come back to the market's mood or technical tenure, texture itself, would you be in the camp to say that there aren't major downsides for this market simply because of the longer term qualitative positives politically and otherwise?
I don't think there are major downsides unless, two things happen. One is the global economy goes into a major recession again, in which case then it becomes very difficult for any economy to really well. And second, as I said, if the rupee were to depreciate in an uncontrolled manner, that could also cause problems. And that could happen, of course, if the FIs start taking money out, not only from equity, but maybe from the debt market. So apart from that, things are actually, pretty good as far as for the Indian economy in terms of oil and inflation and so on and so forth. And therefore, one would definitely expect it to be an outperformer. And I think, as I said, a heavy correction would be a good time to buy.
So for the medium term, Vibhav, say for the next 3 to 6 months, what could the range of this market look like?
Well, on the worst side, I think if we have a real, very big fall in the global market further from here, and FIs pull out money, I think the worst we will be looking at is 73, 7,400 on the downside. But I think as long as 7,800 doesn't break, we seem to be quite okay. So on the downside, I think 73, 74 would be the worst. And upside, of course, will take care of itself. We'll have to see how the global developments happen.
Okay, I have a longer term question on asset allocation, especially for fund managers who are managing balanced funds and, of course, for lay investors as well. If the inflation trajectory is the way it is, it's a 70% downside surprise, positive surprise that we got both on the CPI and the WPI. Everybody is now redrawing their, forecast of the IIP, of the inflation chart. Surely that opens up a fixed income buying opportunity as well. What's your call on that side? Would you allocate money, and how much will it make, at least comparable money as stock markets?
I think you're right. We are becoming more positive on the debt side of the market, and for the reasons that you mentioned. So one would definitely increase some allocation to the debt market, and maybe reduce, if you were asset allocator, maybe reduce equity a little bit if you were really, very overweight on equity. You'd probably reduce that maybe 5-10 percentage points and put that into debt.
Okay. Which sectors would you trim out of, if at all?
One would be, of course, global commodities, because with the global situation being it is, that's one sector which may not be so good. And maybe, I think, capital goods, and particularly some specific type of capital goods stocks which have gone up too much, because that's a sector which always is a late starter, and so right now because the investment cycle is still not starting. So maybe trim some of that.
All right.
All right, Vibhav, thanks for joining us. We leave it at that.